Oh, let's see. Come on, boys. Where's my page? Um, yeah, but with the metaverse, I think going the ETF route is the smart route. I think the metaverse is just. I mean, investing in the metaverse to me is kind of one of those things that's just such a no brainer. It's absolutely going to be huge, and I really think it's extremely important. And let me see here. Give me 1 second here. I lost my page, so let me try to find it again. Okay, so the full.com gives like some top 10 metaverse ETFs. And one thing about these metaverse ETFs that I noticed is that they all tend to kind of move together. The other interesting thing about it, though, is that particular one that you mentioned, that you asked me about, is it hasn't been around that long. So it's very difficult to know how well it's going to do. I think so far this year it hasn't done well. But at the same time, the metaverse play is a long term financial play. And some of the companies that are in the metaverse ETF are companies that, are just solid companies that are well positioned to do well as the metaverse grows. Nvidia, Roblox, Microsoft, Meta Platforms, aka Facebook, Unity Software, Apple, Amazon, Autodesk, Qualcomm, Tencent Holdings. So they're not necessarily investing in a way that's just cutting edge and risky. There are One of the recommendations I would say is that maybe you might want to have some individual stocks as well if you want to do the metaverse play, because that might allow you to really get those big flips. But in generally speaking, all these companies are just solid. I mean, Nvidia's been killing it, and Roblox and Microsoft, and they're not that expensive right now. So that might be, your opportunity to go in and make a move if you have some extra cash on you. All right. So next question that you guys submitted in advance is Terrence says, what are the technology stocks or ETFs you recommend that are geared toward innovation in cybersecurity? Tech stocks or ETFs geared toward innovation or cybersecurity. So Terrence, what I did for you is I looked up some of the top cybersecurity ETFs, and here are a couple that you may want to look at. One is the Global X Cybersecurity ETF. The ticker symbol is BUG, like bug, like mosquito bug. Um, Another one is the First Trust Nasdaq Cybersecurity ETF, and that ticker symbol CIBR. So those are a couple. So yeah, if you want to get into something like cybersecurity, again, I think ETFs are just a good route. I don't think picking individual stocks is always the most efficient way to do that. Let's see here. Next question. James Keller says, Dr. Watkins, what are your thoughts on buying stocks that pay dividends? I think that's going to be really important for 2022, because you're going to have a little bit of a storm driven by some uncertainty about like sort of what these Fed moves are going to do to the economy. A lot of the Fed moves are becoming a little more predictable, but what isn't predictable is what variables are going to come into play that might cause the Fed to have to change course. And so the Fed is now committed to slowing down the economy through a series of interest rate hikes. When they raise interest rates, it tends to pull stock prices down. But the problem is that because these variants of the virus haven't been, because these variants haven't gone away, they're sort of leaving the door open for having to adjust for the variants, getting worse, right? So one scenario to imagine is, what if, next week a new variant comes out that has a death rate of 10%? That's going to start shutting everything down. You're going to have an interesting shift in the U.S. economy where you might have actually declining demand, and some would say that declining demand, ironically, even though it would slow down the economy a little bit, it would also slow down inflation, because a lot of your inflation in the United States is different from what's happening around the world. Japan has the same supply chain issues that the US has, right? Like, so now we have these supply shocks that are pushing prices up because it's harder to get stuff, into the ports and all that. But Japan has the same issues, but Japan does not have inflation like the US does. A lot of that is because there's a difference in terms of how the Japanese consume. The Americans are pretty reckless when it comes to spending. Like, we spend like crazy. We are trained. Like, you talk about brainwashing running deep. You're brainwashed in the U.S. to be a consumer from birth. Why? And this isn't just black people. Black people are just the ultimate consumers. We're like the extreme in consumption. But just generally speaking, When people ask, well, why is it that in public school we don't teach people about money management and saving and investing and all that? Well, because they need you to be a consumer. Your job is to be a heavyweight consumer, to buy, to go serve the corporate plantation so you can get money to go buy more and more stuff. South Park just did a really great parody about that, where they showed these Amazon workers kind of going to work and, just trudging to work every day. And they were using their paychecks to go buy Amazon products, right? And so ultimately, a lot of this excessive consumption in the United States is a driver of inflation around the world, right? We are straining supply chains around the world because Americans are like the fat kid in the store that just can't get enough candy. Christmas time, we love spending money. I spent a bunch of money yesterday. So what I would encourage you to do though is you got to go against the grain a little bit. When you shape your family culture, you have to incorporate production and entrepreneurship and investing and saving and just frugality and getting away from materialism that's kind of being ingrained in you at an early age. Because the more I analyze the system, the more I see like, oh wow, systematically they're prepared, they're training you to do this and training you to do that. Even universities and the way they're structured, they're training you to prepare you to go serve the corporate plantation so you can then get your money and then go buy a bunch of products made by the same corporations you work for. So to some extent, not all of that is completely sinister in terms of the shaping of the system. The problem is though that they're going to be like these masses of people on the bottom who are just drowning in debt because they gotta just have the latest iPhone and a Gucci purse to go with it, and all these other things that are not necessarily good for you long term financially. So going forward, you're gonna have an economy that's grappling with inflation. Inflation probably isn't gonna go away. Um, if there is a variant that comes along that has a high death rate, then you could see um, possible stagflation, which is a stagnant economy with inflation at the same time, creates a whole new set of problems for the Fed. So, which could lead to a shift back to the easy money policies they had before. The problem with the implementation of easy money policies in the U.S., though, is another driver of the excessive demand of Americans is that they pay too much stimulus out. Like generally, economy wide, they put out way too much money in stimulus. So all these conversations about the value of the dollar declining and all that's very, very real. What Joe Manchin was protesting with the Biden administration and the Build Back Better plan, that's very, very real and authentic. But one thing that's kind of missing where the Democrats are right and Manchin is wrong is yes, there was overspending, but that money didn't get to the people that really needed it. What happened was you had the government basically allowing itself to be raided by rich people, right? So that's why Elon Musk made $100 billion during the pandemic, but you have single mothers that can't even afford daycare right now, or people that can't even afford their rent or basic necessities. So what is a problem with the government is that it seems like they get real financially conscious when it comes to doing things for working class and poor people, but they're not financially conscious when it comes to doing things that are going to benefit wealthy people and corporations. And that's your big problem. So that's where Manchin is right, but he's wrong. It's kind of a mixed bag there. All right. So anyway, let me keep going here. Next question that was submitted from you guys, Don Trell says, do you know how I can find a good CPA in my area? If so, what should I look for in a good CPA? I live in Gary, Indiana. Well, shout out to Gary. I love Gary, Indiana. My wife is from Gary. That's why, and I love my wife, so I love Gary. Okay. Uh, McGee Limited. I think that's what the name of the company is. Those are the people that have done accounting for me in the past, and that are really good at what they do. So I don't know how many clients they can take on, but they probably know people that can do your accounting for you. Also, maybe contacting the Black Accountants Association, looking for accountants in Chicago, or putting something on Facebook, just saying, I'm looking for an accountant in the area. And remember, I was mentioning to you about degrees of separation. Chances are one of your Facebook friends knows somebody who's an accountant. Usually with Black folks, it's not hard to find Black accountants, lawyers, or real estate agents. Black people are just some of the most amazing professionals ever. We are super highly trained, hardworking, highly educated, and we really You know, like I went to Atlanta and I was gonna buy a house and I said, I'm looking for a realtor in Atlanta, and I got like 100 submissions. I kid you not. I couldn't believe how many extraordinarily amazing and professional people I saw that were involved in real estate. So, you know, while we can certainly say that the image of black people has been severely distorted because you've got these representations of black people that are not um, indicative of anything positive. You know, I don't like the idea that some raggedy, illiterate weed smoke, you know, excessive weed smoking black man, you know, is representing like what the black male is in America. Like, there's nothing wrong with smoking weed. I'm not judging you if you do that, but I'm just saying, you know what I'm talking about, like that raggedy guy, you know, that they're putting out there as the image of the black man. It bothers me a lot because that's not the black people I know, right? A lot of you are very well educated and a lot of you are extremely hardworking and very professional. And I just encourage you to carry that with a badge of honor, though. Like, you know, don't feel like you have to try to be ignorant to fit in. Like I'll see like lawyers that are doing like ridiculous things, like twerking on TikTok. I think I saw a lawyer or a real estate agent or something like twerking and showing her booty on TikTok to get more likes and more attention. And I'm sitting there thinking, you're a lawyer. You shouldn't be showing booty on TikTok. Like that doesn't make sense. But I knew what she was doing. She was trying to just get people to pay attention to the fact that she's a smart black lawyer. And I just really think that those of you who agree, who understand this struggle, I encourage you to be a little more conscious about who you're following online and why and what you're supporting online. A lot of immaturity is really pushed to represent the black community. So when you see a 45-year-old man who's a comedian who does ignorant stuff and he gets 1 million views on his videos, you know, try not to get too caught up into that. You know, you can laugh along with the joke, but at some point, somebody in our community has to be the grown up. At some point, we got to start supporting the grown ups because we have a lot of 45-year-old teenagers on the internet. And that's just not the way I think you want your community to be represented to the world. All right. So anyway, let me keep going. So yeah, try McGee Limited. That might be a good place to go. They know some accountants. I don't know any other accountants in Chicago I can think of in the area, not right offhand, because I have the accountants I like. And Rebecca Samuels at Pythagoras LLC, but she's in DC. She's really good too. And it's Pythagoras, just like the Pythagorean theorem. William Lumpkin it says, with $20,000 in funding in my TD Ameritrade self-directed IRA, is there a suggested rule of thumb on the percentage of dollars invested across stock types for diversification? Yes, the rule of thumb for diversification is if you look at the balance between stocks, equities, and bonds, one rule of thumb is your age should represent the percentage that you have in bonds, right? So if you are 25, they say you should have about 25% of your portfolio in bonds. If you're 65, 65% in bonds, etc. That's a good rule of thumb to kind of take a look at. All right, so let me see some of your questions in the Q&A section. Those of you who are here that are putting your questions in the Q&A section, I'll answer those questions next. Helen Weaver, hello, Dr. Boyce. What is your take on this news clip on reducing our access to cash? I can't watch the news clip now, Helen, but if you log in at the blackstockmarketprogram.com, leave the clip in there for the next week's questions, and I will look it up, I will watch it, and I will analyze it, but I can't do it like right now in class. So let's see, cash squeeze before the scheduled attack. What is these alternative ways to ensure that we have availability of cash when we want it? I don't know anything about the cash squeeze. I can look it up. Again, leave it as a question for next week. Just log in, and the link is at the top of your curriculum. But in terms of access to cash, when you're investing, you always want to have some cash available so you can kind of make a move when you need to make a move. Think of your cash like soldiers in a war. You don't want to have all your soldiers constantly out there fighting. You want to have some in reserves that you can call on in case the situation escalates. So, or an opportunity emerges. So with stocks, sometimes you have a decline. I love dips in the market as much as I love it when the market goes up. Literally, I love them both because everything that happens in the stock market is an opportunity if you know how to look at it in the right way. Everything that happens is an opportunity. Everything. So the Great Depression was a huge opportunity. People became millionaires during the Great Depression. So ultimately, what I would encourage you to do is just sort of look for those opportunities and have some cash on the side, maybe from your job or your side hustle or your business. Stack some cash. Don't feel like you have to invest everything right away. All of your money shouldn't be always put to work all the time. And then when an opportunity emerges or there's something you want to get into, especially a quality company, the best investment in a dip, in my view, is when you see a really good quality company or mutual fund that drops temporarily because the market is having a bad day, right? Or because the market's reacting to something that's only temporary. You know, it's like right now with this variant, that's temporary. That's not even there's nothing about that variant in my view that's going to matter 5 years from now. So I bought a lot of quality companies when people started overreacting to the variant. Michael Johnson, Dr. B, would a global consumer staples index be a good lifetime investment for a 55-year-old retiree? KXI. I don't know about that, about KXI. I would say that it could be a good investment. I would look at the history of the investment. I would look at the volatility and make sure you can stomach the volatility. If it's an index and it's diversified, that might be a good move. If you're 55 and up, you might want to aim for things that are moderate to low risk. I don't know if you want to have a lot of high risk investments at that stage. Ronnie David, I'm watching your session with my 11th grade class in NYC. We enjoy your Tuesday sessions and want to say hello. Well, say hello to all these kids. I think that I'm gonna tell you. Let me just say something to the 11th graders and all the other young people that are listening. If you take in even 10% of what we're talking about and you apply even 5% of that 10%, you're going to be so far ahead of so many people. I can't overstate to you how important it is. Like, if you want to get ahead, you want to have money, you want to make money, give me a yes or no. Do you want to be wealthy? Do you want your family to be wealthy? Do you want your people to be economically good? Like, do you want to leave a legacy? Give me a yes or no. If you want to do that, it's very, very easy. Very easy. Just get an early start. Like, give your kids an early start. Because the number one factor, I've studied, I've been in finance for a while. Y'all know that, and I've studied the math. I know the math. Like if you tell me about a stock price, I don't see it the same way everybody else does. I see the math behind it, the mathematical equations that define what moves the value of an asset. And every asset in the universe is valued in pretty much the same way. The variables just change, and in almost all those calculations, the number one variable is time. The number one variable is time. It's just like watching a tree grow. If you say if you plant 2 sycamore trees and someone says which tree is going to be the biggest tree, next week, yeah, okay. Some things may matter, like the quality of the seed and the weather in which the tree was planted or whatever. But if you tell me one tree got planted last week and the other one got planted 18 years ago, which tree is going to be the bigger tree? It's going to be the one that was planted 18 years ago. Well, what's the advantage? The dominant factor is time. That tree had 18 years, an 18-year head start. So even if that tree is growing super slow, it could be the slowest growing tree ever. It's probably still going to be the biggest tree because it's had more time. Or if you and I are in a race and I'm going 100 miles an hour and you're going 8 miles an hour, but you get a 2-year head start in front of me, and somebody says, well, who's going to be winning the race 2 hours from now? One person's going 100 miles an hour, the other one's going 8 miles an hour, but he has a 2-year head start. Well, you're going to be winning because you've been moving for 2 years, right? So going fast is not as important as being consistent over a long period of time and getting an early start. So a young person who has parents that force him to start investing and really start investing things for him when he's like a baby has no problem being rich. It's very easy for that person to be rich. What's hard is becoming rich quickly. That's what's hard. It's hard to figure out, oh, I ain't got no money. I'm broke now, but I want to have $1 million by next year. How the hell is that going to happen? I don't know. Well, I'm going to get a record deal. I'm going to go get to the NFL. Good luck with that. Good luck. You and the other 10 million people have tried to do it and failed. That probably isn't going to happen. But if you start investing for a child when they're young, or they're learning investing in the 10th grade, and they start consistently putting their little allowance money, a little bit of, they get their first job at McDonald's, they put this, 20% of their McDonald's money towards stock and they don't sell, and they're doing that consistently, that kid's going to be very wealthy and probably a millionaire when by the time they're 30, 40 years old. Like maybe about 35 or 40. Like they're going to be extremely wealthy, especially if they consistently pour their money into investing the same way we pour our money into spending. See, and here's the thing about spending you got to be careful about. This is where so-called black spending power is a hell of an illusion and it's very harmful to the community. Is remember, when you're spending, you're investing. You are investing when you are a spender. The problem is that you're investing in a way where somebody else is going to get the benefits of your investment. That's all that is. Like, because think about it, if I spend money on a pair on some Beats by Dre headphones, and I go give Apple $300 of my money, or whoever owns the Beats by Dre, maybe it's another, I don't know which company owns it, but I'm giving that money to them. Well, they're going to take that $300 and they're going to invest that $300, and they're going to get a return on investment. I'm not going to get a return on investment. I'm going to get a pair of headphones. Now, headphones are nice. I think that's cool. There's nothing wrong with owning headphones. But I also want a piece of the other side, too. You want a piece of the big boy money. You don't want a bunch of toys, right? Toys are for children. Money, big boy money is for grown-ass men. So I think it's great, that Ronnie's got the 11th grade kids studying this stuff at an early age. What I really encourage you to do is really, really push each other to implement at least a little bit of this, just even small amounts of money. If you're consistent, that's the key though. You got to be consistent, and you just plant your flowers and you let them grow. And if you're consistently planting flowers, like for example, if I was to tell you to add up the number of times that you went to the bathroom in the last 20 years, it would probably be in the thousands, right? If you go to the bathroom let's say 3 times a day, that's about 1,000 times a year. Over a 20-year period, you've gone to the bathroom 20,000 times. Did you know that you went to the bathroom 20,000 times? No, you didn't, because you weren't keeping track. But going to the bathroom was part of your routine. It was just something you just do every day. You don't even think about it, right? So over time, you've accumulated all these bathroom visits, and you don't remember hardly any of them, but you've added them all up, and it's like, whoa, I've gone to the bathroom 20,000 times. Well, the same thing is true with investing. The people that build their money the best are like what they call these automatic millionaires, who are just investing a certain amount of money every week consistently on clockwork. Just the same way people spend money every week. And if I was to say, add up all the money you spent in the last 10 years, you couldn't do it. You couldn't do it because you just spend like clockwork, right? Just like going to the bathroom, just like sitting down and eating a meal. You just clockwork. It's part of your routine. So what I'm saying is take that same model and apply it to investing. Clockwork, consistently. Don't even think about it. Don't even remember. I own that stock. I don't even remember buying it, right? Do you know how many stocks I own that I don't even remember buying them? I swear, because I buy stock like clockwork. I just do it. I have extra money. I'm not going to buy no Gucci belt. I'm not going to get no new car. My car is very nice. I'm not going to go on another vacation. I travel a lot already. What do I do with the money? Well, I'm going to just buy some more stock. Oh, that looks like a good stock. Oh, that looks like a good one too. Oh, I want to get some of that. Oh, I want to buy some of that. And next thing you know, I've got hundreds and hundreds of stocks. I don't even remember buying a bunch of them. If you ask me, like, why did you buy it and when? I can't even tell you, right? That is what I'm talking about. And that's what I mean when I talk about the fact that wealth is cultural. There are cultures that do this. There are families that do this as part of their culture. And when you have that in your culture and it's part of just your DNA and your thinking on a conscious and subconscious level, you're going to be richer than people who don't think that way. Your problem, though, is that they put spending in your culture, and that's why all your money leaks out and you don't know where it went. Right? Because they didn't inject you with they didn't inject you with the vitamin that teaches you how to invest. They injected you with the poison that teaches you how to spend. So what happens is that you're spending in a way that I wish we were investing. So you have to confront that culture, be very conscious about it, and shift that culture. And by the way, if you want some help with that kind of thing, we have a Black Wealth calendar. If you want to get one and put it on your refrigerator, it has Black Wealth principles for every month of the year. It's a really good calendar. It's all black. It's something we do every year. So feel free to go to blackwealthcalendar.com, or you can go to boycewatkins.com and find the calendar. But that might be a good way if you're looking to sort of shift your habits. Or even when I lost weight, the biggest thing that changed when I lost weight was I started incorporating exercise into my daily culture, into my daily routine, right? I don't even think about it. Now I have to go exercise every couple of days or I don't feel right? So form those right habits. That's how you build wealth. That's literally the difference between people that build wealth and don't build wealth. It's not so much just about who went to school the most and all this other stuff. That stuff matters, but it doesn't matter how many years you go to school. If you're not applying it on a fundamental basis, then you're not going to benefit from what you've learned. Okay, so you have to apply it. All right, so let me answer a few more questions here. Let's see. Ronnie says my students have this question asked. If they saved $1,000, how should they invest it? Should it be in stocks, ETFs, index funds, or crypto? Please advise. I would think. I would say if you're doing long, I think you could do a little bit of all of that, right? I don't think you have to pick. I think that spreading your money out is a good way to go. So maybe if if you have that money invested as a group, maybe buy some crypto so you can be part of the crypto world. Maybe an ETF or two. So maybe get something that's stable, but also get something that adds a little spice to your portfolio. So I think, especially when we talk about kids, I think it's fun to have something to talk about every day. So like if you buy Microsoft, talk about the company, talk about Microsoft, talk about what it means to be an owner in Microsoft, right? Again, a lot of investing is also emotional. Like I'm emotionally attached to the idea that as a black man, I feel better about life when when I own things, right? So that emotional component can be used to your benefit. So I think that if you're buying like I encourage everybody here to buy shares of stock for your kids for Christmas. Don't just buy them a bunch of toys and shoes and all that. Get them a share of stock. And then what happens is that gives you a space to kind of talk about what it means to be an owner in Disney, what it means to be an owner in of this crypto or whatever, what's happening in the crypto world, right? And you're sort of talking about it, but you're not talking about it as an observer. You're discussing it as somebody who's literally in the game, like you're in the game. That's a great feeling. Like when we talk about integration, 1960s integration doesn't, that doesn't inspire me, to be honest with you. Like when they were getting beat over the head so they can go spend their money with white people. That did nothing for me. I'm not making fun of it, but it's true. But what does inspire me about integration is being integrated into the economic system in a meaningful way, where I can see that, oh wow, Microsoft just acquired this other company and the stock price shot through the roof. And I have more money in my bank account because I'm one of the participants in that whole process. That's pretty empowering, right? And I think that giving that power to your kids, kind of helping them understand that this is one of the pathways to become a business owner, that value system. What happens, that what I've seen is that once you show people how to get wealth through things like ownership, they don't usually want to go backward. They don't want to go back and say, oh, I think I just want to be a slave again. I don't like being free. Like once you get freedom, you kind of become addicted to it and it becomes an awesome feeling. You don't want to let that go. All right, so let's see. Lydia says, what do you think about the ETF of Japan equity stock? I haven't. Send me that question again next week. Just log in at the blackstockmarketprogram.com and submit the question. I can do some research on Japan. The one thing that comes to mind when you talk about Japan is that Japan's economy has been pretty stagnant for a long time. They had a bad run in the 80s where they kind of had a really strong economy, kind of like the one we have right now. And then they just sort of crashed, and the market crashed, and literally 30 years later, it still hasn't recovered. I encourage you to go take a look at Japan and the 30-year history of the Japanese stock market, because that shows you what could happen in the United States. Like we always assume that if there's a dip, it's going to come back within a week or two or whatever. There's no guarantee of that. For Japan, it really still never really recovered, and they have like zero inflation, like really low inflation, and they have a deflationary problem. It's very strange. It's a very different kind of economy. So maybe to get some exposure to Japan, sure, why not? But there's nothing magical in my view happening in the Japanese economy. That makes me want to necessarily always be a part of that. Lydia, let's see what's up. NFT, is crypto the turn of the tide, or are they with the 50-50 with Coinbase? Okay, what's up with NFTs? I think NFTs are good for selling. I don't think they're good for buying. I don't want to buy any NFTs, but I would sell NFTs. And I think NFTs, unfortunately, there's an undercurrent of money laundering, and I think Hollywood and the recording industry is playing games with NFT and the metaverse. Like when somebody paid $2.4 million to live next door to Snoop Dogg's digital house. It wasn't his real house; it was his digital house. That made me feel like, okay, somebody's running the game here. Somebody's creating artificial value. I'm not a big fan of it. I wouldn't get too heavily involved with that. Maybe dabble in it, maybe educate yourself on it, but I wouldn't get into to the point where I'm putting tons of money into NFTs. All right, so let's see. Hey, Dr. Boyce, I got hammered on Jumia stock. I purchased 23 shares at $50. It plunged to 12. Am I better off holding these shares until the storm is over, or shall I sell to cut the losses? That's the kind of the $1 million question. I think that cutting losses could be justified because the economy is leaning in a favor or in a direction where stocks like Jumia might get hurt even more. But if you are a long-term investor and you believe in the business model, and let's say you look at what the analysts are saying, and the analysts are saying that Jumia has, say, greater than a 50% chance of eventually becoming a strong company, then this may just become a long-term investment, right? So, I would say getting caught up in one stock is not a good, comfortable way to invest because so many weird things can happen with individual companies. So hopefully Jumia is one of several companies, at least 25 or 30 companies that you're invested in. And then, if you want to cut your loss and maybe write it off on your taxes, you can do that. Or if you want to hold out and see how the story ends, that's fine. But remember, if you bought Jumia less than 2 years ago, you're only seeing a tiny fraction of the story. Remember when they talk about these big inspirational stock stories like Amazon and all that stuff, they're talking about like 20-year periods of time, right? And a lot of times I think, for especially those of us that are kind of new to investing and all that, you have people that really think like, wow, I invested in this stock 6 months ago. That's a really long time. 6 months ain't nothing. Like the movie hasn't even started yet if you invested in that company starting 6 months ago. So I would encourage you to just kind of understand that this is meant to be a long-term game, not a short-term game. So just be careful with that. Volta and ChargePoint, are they good buys? I really can't say because I don't have the information in front of me. But again, leave the question for me next week. Just log in at theblackstockmarketprogram.com and you can leave all your questions for me next week. If you have a question about an individual stock, I will look it up and I will give you a breakdown based on my research. Let's see here. Benjamin King. How long do you believe we'll have to wait until the stock market is leveled out from the effects of inflation? How long? We say leveled out. I'm trying to figure out what that would mean. Leveled out. I don't know what you mean by leveled out. If you want to know how long I think the inflation is going to last, I think that I know Goldman Sachs doesn't predict high inflation over, say 2023 and 2024. So I think that most experts expect that inflation right now is transitory. It's not permanent. There's no guarantees, but that's what people are thinking. Let's see here. Regina, what are some good bonds to invest in? I would look maybe toward a bond fund or something like that. Leave that question for me next week. Just log in at theblackstockmarketprogram.com, go to the top, and there's a link where you can leave me questions, and I can research and find some for you. Letitia Parker, Dr. Watkins, do you know of any real estate investment clubs or groups who are focused on restoration and building in the city of Gary, Indiana? No, I do not. I know that we have the blackreigroup.com in the Black Business School. They're doing a lot of work in Baton Rouge. We don't have anything specifically that's doing anything particularly in Gary. Although I personally, at some point, want to invest in Gary because I like Gary a lot, but we don't have anything that I'm aware of that's in Gary, Indiana. That URL for the real estate group. Julian Gordon is our dean of real estate in the Black Business School, and you can go to theblackreigroup.com. REI stands for Real Estate Investment Group, so it's theblackreigroup.com. And by the way, guys, if you ever have any questions about the Black Business School or your membership or anything like that, just email support@theblackbusinessschool.com. That's support@theblackbusinessschool.com. Don't forget that THE. We have a really great support team. They're always available to answer your questions about your logins, your program, what the next step might be, what you can do for your kids, all that stuff. So feel free to just email support@theblackbusinessschool.com. Let's see. Do you know how long the black dollar stayed in the community? They say it's less than a day. But actually, that whole statistic about the black dollar staying in the community for less than 6 hours, that statistic is nobody really knows exactly where that statistic came from. So there's not a lot of scientific evidence to show how quickly the black dollar leaves the black community. But I think most of us kind of see what we do with our money, and we know that there's still some work to do in that area. So I do feel that there is a conversation to be had there. Linda, I came in late. However, do you have any thoughts on Steph Curry's EFT 2974 collection? No, I do not. If you want to log in and leave the question for me next week, feel free. But I don't know anything about what Steph Curry's doing. The only thing I know about Steph is I happened to see something where he said him and his wife have an open relationship. And I know my wife is very disappointed because she loves that couple. And I guess she doesn't think that's the the best way to conduct a marriage. But hey, to each his own. I'm not judging. Doc, where do you put the stock for kids? My business partner bought crypto for my kids, and someone gave some money for them to invest. How can I set that up for them? I think that with the kids, if you want to get them coached on investing, they do have what they call custodial accounts, maybe a stash. The Stash app has a custodial account, and some of the other apps do too. And you can give them some kid money, some play money to kind of play around with. I wouldn't, if you're giving them, if you have like a lot of money, that you're going to really leave your kids, like when you get older and stuff like that, when you die, I wouldn't give them control of that money, right away. Like with my kids, I put the money in a trust, and I have conditions under which they can get that money, because I don't want them to just do something silly with that money. I don't want them to take it all and spend it quickly. So in my estate plan, I set it up where they'll get, certain amounts of money. I have a trustee also that I trust that's going to dole out the money based on their judgment of what's going on and what my wishes would be. But also, it's being doled out over time, and so it's not like, oh, you're going to get this big check, to just go do whatever you want. And I think that's really important, because most wealthy people lose all their money in one generation. Like, so you work your butt off for a whole lifetime, and you don't think through how you give the money to the kids. Your kids are actually the biggest thieves. I hate saying it that way, but sometimes actually your own children end up becoming the ones who waste everything you work for, because they didn't work for it, right? And if they're not prepared with the ability and the knowledge of what to do with that money, some of them will blow right through it. Or if you put a bunch of money in a custodial account where your child can have control of, thousands of dollars at the age of 18, he falls in love and finds some girlfriend and gives her all the money because she needs a new car or whatever, you're going to be mad about that. So I would really protect you got to protect your resources from everybody, including your own family. Sometimes it doesn't mean that they're terrible people. It just means that if you work for that and you made those decisions to do that, you have to think carefully about legacy and succession plans. There's a whole show on Showtime called Succession that's really good, because it kind of goes through the interesting dilemma of this billionaire who has these kids who are complete idiots, and he's kind of a jerk too. And it just talks about those family complexities that a lot of you are going to face when you're talking about how you pass this legacy on to your kids. So I think your estate plan is the best way to do that. So you may want to, I know in the Black Business School, if you email the support team, support@theblackbusinessschool.com, we've had some master lectures done on estate planning. I think in Black Money 103, the entrepreneurship program, there's an estate planning lecture by a couple of attorneys that are affiliated with the school. And I think we have a master lecture like by itself by, I think, Kimleah Sherman, who's a great estate planning attorney. She did a master lecture in the Black Business School on estate planning. I encourage you to take some time to learn how that works, because when you get wealth, there are steps to wealth accumulation that most people don't know. The steps would be typically, one, to get money, you got to learn where the money is. That's the first thing. If I don't know where the money's at, I can't go get it. Two, I got to make a plan to go get the money. So like if I know where money's at, but I make a plan to like just work for massa every day and not, and I don't have any plan to get an education or start any businesses or generate streams of income or make any investments, then I'm not going to get wealth. So I have to make a plan. What's my plan? My plan is I'm going to develop 3 streams of income. I'm going to invest consistently. I'm going to buy some real estate, whatever, right? So you know where the money is. Now you've made a plan. The third step, the big one, this is the wealth accumulation process. This is where you actually work the plan. You got to execute the plan, right? That might take years, 5 years, 10 years, 15, 20. But the good thing is that, you're going to see little victories along the way. You're going to see yourself get liberated from the corporate plantation. You're going to, things that used to be expensive will suddenly become cheap. Your financial literacy grows over time, and you're accumulating assets. The difference between a rich person and a poor person is very basic. It's all a matter of accumulation. That's it. Rich people have just been accumulating assets while maybe you were giving your assets away, right? I'm not saying that rich people are better than you or whatever. And some of them, you're right, were born with a silver spoon in their mouth. But even the ones who were born with a silver spoon in their mouth had somebody at some point who engaged in a process of wealth accumulation where they simply brought in more than they put out. The fourth piece, which a lot of people don't talk about, is protecting your wealth. So once you've you know where the money's at. You made a plan to go get it. You worked the plan and you accumulated all these assets. Now you got to protect that wealth. This is why a lot of your athletes and your rappers go broke. The reason a lot of your athletes and rappers go broke is because suddenly they're thrust into a bunch of wealth and they don't know how to manage it. They don't know how to protect it. So think about this, right? This is where you got to think about how you're living and the choices you're making and how you view the world. So if I'm a rapper and I got a $50 million deal, but I want to keep it real, so I'm still out thugging in the street and out killing people and slanging dope and getting involved with any woman with a big butt and a smile, then I'm not protecting my wealth at all because I'm living like a poor person even though I'm rich. And now the thing about it is, so if I go to the club and I want to keep it gangster, so somebody steps on my shoe, so I decide I want to shoot you in your toe because you stepped on my shoe. Well, now not only am I facing, things like prison and losing my wealth, losing my record deal and all that, but I'm also facing lawsuits. Look at Travis Scott. Travis Scott has made tens of millions, probably $100 million, and he's facing a multi-billion-dollar lawsuit for what happened to Astro World because somebody didn't protect his interests properly. So when you talk about protecting your wealth, that comes in the form of insurance. It comes in the form of things like estate plans. There's not enough conversation about that. That's why you have all these celebrities, Prince and Aretha Franklin, and some other people dying, James Brown, others dying, where all their money is going right back to the lawyers, to the estate planning attorneys, to the tax officials, to the court magistrates. It's going right back into the very same system that you were trying to overcome in the first place. So you have to have a policy and a strategy that involves the protection of your resources. If you cannot protect your resources, you will lose them. So those are the 4 steps to wealth accumulation. If you learn how to do those things, you learn where the money's at. That's where financial literacy comes into play. You make a plan. That's where discipline comes into play. You work the plan. That requires more discipline, right? And more vision, right? And then finally, you have to protect what you have. That requires like some strength. It requires strategic thinking. It requires some courage. It requires, honestly, for you to really confront any part of the culture that is anti-wealth protection. I don't think this is taught enough or talked about enough in our community, and that's why you see so many rappers and entertainers just go broke. All right, anyway, let me keep going. I'm going to read a couple more questions, then we're going to head on out for today. Doc, sorry, you asked about the stock for kids. Okay. And by the way, we have a wealth building program for kids at blackmillionairesoftomorrow.com. Feel free to go to blackmillionairesoftomorrow.com. There are modules on real estate, stock market investing, entrepreneurship, etc. Also, there's a self-study exam so you can make sure your child knows the material cold. And there's also a little degree. Once they go through all the curriculum, they become eligible to get what I call a baby bachelor's degree that they can put on their wall. This is really important because it builds their self-esteem. It helps them identify themselves as wealth builders. So when you're talking to kids, you have to use affirming language. You have to tell them who they are because they don't know who they are a lot of times. They look at the world to tell them who they are, right? So the world is going to say, "Oh, you're supposed to be a rapper or a comedian or a basketball player." Well, you need to tell them, "No, you can also be a mogul, a scientist, a business owner, a boss, whatever it is you want to tell them," right? So this baby bachelor's degree is clearly defined to shape their self-esteem and shape their purpose in life so they know exactly who they are and exactly what they're supposed to do in life or who they want to be. Okay, so feel free to go take a look. It's blackmillionairesoftomorrow.com. There's all different payment plans. You can literally join for $1 for the first month if your money's tight. Or you can do a lifetime option and just buy and have lifetime access. The other piece of that too is that gets to what I was mentioning to you earlier about the secret weapon. The secret weapon for Black people. I don't want Black people to close the racial wealth gap. I care nothing about closing gaps because I'm not sitting around comparing my life to white people. I don't care. White people are not like we're special. No one's as special as we are in my view. So I'm not comparing myself to anything other than our best self. But the thing about it is that if you talk about closing gaps, I'm not trying to close the gap. I think that we can create a new gap. And the new gap means the gap between us and everybody else. Like literally, I think our kids, some of you are already doing this with your kids. Your kids are going to rocket past everybody. They're going to rocket past white people, Asian people, Jewish people, other Black people, everybody, because you're giving them the right value system. Values are so important when it comes to wealth. I watched, the Nation of Islam. You can't you put a kid that's educated by Farrakhan and the Nation of Islam against any kid in any community anywhere. That kid is going to kill the game. They grow up and they become like Ben X at 27 years old, who's buying 500 acres of land down in Georgia, or Reza Islam, who's a young guy who's just absolutely an extraordinary leader. Like that's what you produce when you're at your best. So to me, I think when you talk about things like wealth gaps and all that, I believe that the secret weapon is that if we create our own protocol, our own paradigm, our own systems, our own processes for how we educate our kids on wealth by saying, look, I want my child to own a share of stock before they're 2 years old. I want my child to know the importance of business ownership by the time they're 7. I want my child to know the basics of buying real estate or how to start a business by the age of 12. If you're doing these things, then what happens is your kids are way ahead of white kids who go to Harvard and Stanford and Yale because they're starting to learn this stuff when they're 18, 19, 20 years old. Your kids learn this at 2 or 3 or 4. That's how you actually move ahead of everybody else, because the wealth game is a game where smart people play against people who maybe aren't as prepared, and the smart people win. They make the best contracts, they make the best deals, they know how to strategically position themselves to get the assets. They like things like gentrification. Gentrification was pretty much a case where people who had access to capital, that's a little bit of white privilege there for sure, but also who had vision and who had financial literacy and understanding of strategic positioning, were able to go in and say, oh, you're willing to sell me your house for 30,000? Sure, here's $30,000. I'm willing to sacrifice 30,000 today because I know that in 20 years or 15 years or 10 years, your house is going to be worth, $250,000. So I'll give you your 30,000 now, and you're happy because you got 30 grand. You've never had $30,000 in your life. So you're feeling good and you're thinking in the here and now. You can't see the future. You keep forgetting that the future is coming. You keep thinking that the present is going to be here forever. And so you got what you wanted and I got what I wanted. I planted a seed that's going to explode into a beanstalk in 10, 15 years because I view the game differently from you from a strategic standpoint. You're trying to control how much money you have in 1985. I'm trying to control how much wealth I have in the year 1998. Okay, so just keep that in mind. That's the difference between the thinking of a wealth builder versus a person who can't think in that way. Another example might be, I've had times where I've done business deals where I wanted someone to help me with a project, and I said, hey, if you help me, I'll give you 20% ownership in this thing. And because they're not even thinking in terms of ownership, they're only thinking in terms of paychecks. They were saying, well, I don't really care about ownership, but what are you going to pay me? So because I know what they want, I say, okay, well, how about I pay you, I don't know, $25, $30 an hour? And they're like, oh, great. That's a lot of money. Right. And so you're paying them $30 an hour, but then eventually you build a business that's making you $500 an hour. And then what's interesting though, is that sometimes people will go back and they'll say, oh, you tricked me. You tricked me because you're making all this money and I'm not making that money. But the thing is, sometimes, and it might be right, sometimes people get tricked, but sometimes you get tricked because you didn't have any vision. You weren't looking at the big picture. You were looking at the small picture. So a lot of times becoming wealthy and powerful and successful really comes down to thinking big. And the challenge that you have is that because you're trained to be consumers and employees, you're trained to think very, very small, right? And when you're thinking small and other people are thinking big, then you're going to lose. You're just going to lose. In this society, you will lose if you can't think big. If you're thinking tiny all the time and about paychecks and just barely getting by and I'm going to get me an apartment and pay rent and all that, or I'm thinking short term, like the quickest way to be, I'm gonna say this and I'm gonna be done. I'm going too far on this, but I had to make this point. And the rest of your questions, I will we can get them next week for sure. But if you ever want to know the recipe for failure, think small and think short term. If you are a short term thinker who thinks small, you will never ever be able to control the future. Right? If you can't think, 3, 4, 5 years, 10 years down the line, and if you can't think bigger than your current situation, then you're not going to go very far in this world. That's what. So that if I was to sort of summarize some of the quote unquote success I might have had in my own life, it came from the fact that I was always thinking down the road. When I was 25, I was thinking about what my life would be like when I was 35. Right? At that time, it seemed like forever. Right? But I still did it, and so I did things at 25 based on where I wanted to be at 30 and 35. And then so by the time I got to be 35, I was doing extremely well. Same thing. thinking big, you know, aiming for the ownership, aiming to be the boss, or aiming to be at the top of the pyramid. That is how things work in a capitalist society. The people at the top do very, very well. The people at the bottom don't do so well. So don't put your kids at the bottom. Put them at the top. You do that by giving them ownership at an early age and giving them a value system where they measure their economic success more so based on what they own than on how much money they make. Like, you know, paychecks don't mean a whole lot if it's not being converted into wealth. Okay. So, all right. So Rico Tanner says, do you have a date for the next Black Wealth Bootcamp? Yeah, the next Black Wealth Bootcamp is going to be January 6th. Do not sign up now because I'm going to, in the next 2 or 3 days, we're going to do a 48-hour discount where for 48 hours, you'll be able to get in for 48% off the regular price. And so I will make that announcement. Make sure that you're on the email list. If you go to theblackbusinessschool.com, and even if you have a free membership or a low-cost membership or whatever, you can you'll be on the list. I will email out the discount to all the students in the Black Business School, even the unpaid students. You'll all get access to the discount, and we're going to get started January 6th. So anyway, guys, I'm going to get out of here. I hope that this conversation was helpful. I hope you learned something today. As you know, every Tuesday at 11 a.m. Eastern, that's when we meet for stock market investing class. So feel free to join us next time. And if you want to see all the stocks that I picked for this week and everything else, just log in, theblackstockmarketprogram.com, theblackstockmarketprogram.com. You can also leave your questions for next week. So if you have a question about a certain stock or a certain type of investment or a financial issue that you're facing, just put the question in advance, and I'll research it for you, and I'll come back with a specific answer that's based on your specific question. All right, guys. So take care. Have a good day. Love you, and I'll see you guys next time. Take care. Peace.